Welcome to the Investors Trading Academy event of the week. Each week, our staff of analysts and educators tries to provide you with a better understanding of a major market event scheduled during the next week. This week, we'll focus on the European Central Bank Press Conference. This event takes place several times a year after the ECB rates and monetary policy meeting. There's not always a press conference after a meeting, and they're not mandatory. The schedule is set by the ECB along with the press conference. These can be found on the European Central Bank website. The press conference is about an hour long and has two parts. First, the prepared statement is read, and then the conference is open to press questions. The questions often lead to unscripted answers that create heavy market volatility. The press conference is webcasted on the ECB website with a slight delay from real time. Current ECB President Mario Draghi uses these press conferences to manipulate the markets and the euro, and does this extremely well. Not all predecessors have been as vocal as Draghi. It's the primary method the ECB uses to communicate with investors regarding monetary policy. It covers in detail the factors that affected the most recent interest rate and other policy decisions, such as the overall economic outlook and inflation. Most importantly, it provides clues regarding future monetary policy. The European Central Bank's decisions to increase, decrease, or maintain interest rates. Controlling interest rates is the key mechanism of monetary policy, and the ECB influences interest rates by first changing the overnight rate through the purchase or sale of government bonds. Lowering rates can spur economic growth but may incite inflationary pressures. On the other hand, increasing rates slows inflation but can stymie growth. The European Central Bank makes a concerted effort to be transparent in its policy. Market participants pay close attention to the press conference, hoping to clue in on the likelihood of further rate changes. Often, the language used in the press conference holds important signals to how ECB feels about inflation and the economy. The ECB president's language will be hawkish if he's pessimistic about the inflation outlook for the economy. In that case, the market sees a higher chance of future rate hikes. Conversely, if the ECB president believes inflation is in check, his remarks will be dovish, and the market perceives a future rate increase to be unlikely.